When a company announces a big Bitcoin purchase, my question is always, why the hell is the price of Bitcoin not moving? I began thinking about this and honestly asking around on reliable Twitter and landed on a couple of reasons why. And note that these reasons apply for many assets out there. Reason number one is high liquidity, number two is net effect of zero, and number three, and the one that I will focus on here, is no actual demand. Number one, high liquidity simply means that a market is so large that big purchases barely move the price. A great example of this is found within the treasuries market or the bond market. Seeing as government debt is quote unquote the safest place to earn a return, a lot of big corporations park their cash reserves in these safe assets. All this corporate money does by being injected into bond markets is create an ocean of money. Therefore, you can see why inserting a couple of dollars into the bond ocean won't really raise water levels in the ocean. In short, the bond ocean is very liquid. You would need millions of gallons of water, or in this case money, to have any significant effect on the water level. Number two, the net effect of zero is quite simple. It just means that a big purchase is countered with a big sell-off, in turn creating a net effect of zero on the market price. Lastly, and the most important one again, is when a big purchase doesn't actually increase demand. But how is this possible? How can a big purchase not increase demand? It doesn't make sense. Well, it all starts with Bitcoin exchanges. A lot of Bitcoin purchases are made through exchanges such as Crypto.com, Binance, CoinSmart, Coinbase, etc. What's more, most people leave their Bitcoin inside these exchanges simply because it's a lot more convenient, also known as keeping a hot wallet. However, the problem with this type of convenience has already been seen once before. Back in the 60s actually, when all countries had their gold, quote unquote, safely stored in American banks or the Federal Reserve. Countries, instead of gold, had US dollars that they could then redeem for gold. In other words, the dollar was as good as gold. This setup or this system was known as the Bretton Woods Agreement. However, the Vietnam War required the government to increase spending, which they did by increasing the supply of US dollars without any actual increases in physical gold reserves. In other words, the Federal Reserve had a lot more outstanding claims on gold than it had physical gold. When countries realized that their US dollars reserves were no longer as good as gold, they began reclaiming their gold from the US. However, since the US did not have enough gold to back all these outstanding claims, a famous, or rather infamous, announcement took place on August 15th, 1971.
In the past 7 years, there's been an average of one international monetary crisis every year. Now, who gains from these crises? Not the working man, not the investor, not the real producers of wealth. The gainers are the international money speculators. Because they thrive on crises, they help to create them. In recent weeks, the speculators have been waging an all-out war on the American dollar. The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
Yes, the US effectively defaulted on its debts of gold. Now, what does this have to do with Bitcoin exchanges though? Well, simply put, much like keeping your gold with the Federal Reserve, keeping your Bitcoin in a hot wallet within an exchange may create a facade that you have Bitcoin. However, the exchange may simply be saying that you have it, even though they don't actually have reserves for it. you effectively only have a claim on Bitcoin without any actual Bitcoin reserves within the exchange to back it. Now, doesn't this sound familiar? Therefore, when a big company purchases, say, $10 million worth of Bitcoin through an exchange, but doesn't actually take the Bitcoin out of the exchange, there may not have actually been a purchase of Bitcoin at all. Instead, there's only a $10 million claim on Bitcoin. Therefore, the price of Bitcoin does not move because demand for Bitcoin didn't actually increase. And this is why it is so important to take your Bitcoin off exchanges, because you don't actually know how many reserves of Bitcoin these exchanges have versus everyone's hot wallet claims on Bitcoin. More importantly, however, they will pay back big institutions first before they pay you back. So you may end up with 0 Bitcoin at the end of the day.